Palantir just had their earnings report, yet their share price went from about $18 down to $15. I'll talk about why that happened, kind of summarize that earnings report, and then talk about 3 reasons or 3 triggers that could cause this stock to take off. Let's dive in. Okay, first things first, let's take a look in Tykr and see what's going on with Palantir. This stock is still on sale, which is really good. Score is 61 out of 100 and margin of safety is 90%, showing upside potential of 48 in the platform. And just to keep in mind, this fair value, this is really driven by the EPS growth rate. When the EPS keeps increasing quarter over quarter, that's what drives that margin of safety higher and of course that fair value higher. So we'll talk about EPS here in a moment. But as the EPS keeps releasing every quarter and it keeps beating those estimates, we will see this fair value go higher and higher, which gives us a positive indicator to keep buying the stock. All right, so let's talk about the reason why this share price kind of backed off a little bit. One reason is just volatility in the market. Share prices of tech stocks did drop recently. Nothing to be alarmed about. This happens all the time. But let's take a closer look at the earnings calendar. Most stocks within Tykr have this calendar. You can see what the estimate is and what the reported is. And you want to look for that green. So in this case, you can see back in February, they beat the estimate by 50%, which is huge. Then in May, they beat the estimate by 25%. The issue here is they pretty much met expectations, 0% surprise. So it doesn't really blow institutions away. And just to remind you, share prices move the most from institutions. It's not so much from retail investors like you and I. It's when you beat an estimate by let's say 10%, that's when a large institution will say, all right, we're going to buy 1 million shares of this stock and drive that share price up. This is how the market really moves. So in this case, it's like, all right, we met expectations, nothing surprising, nothing bad, but I'm sure there's some rebalancing going on within some of these institutions. They kind of sold some shares, but don't freak out. If you saw that share price drop from 18 to 15, it doesn't mean you should sell as well. All right, so let's dive into that earnings report. I'll kind of summarize the positive signs and then lead into what needs to happen to really drive this share price north. Okay, a few things to highlight. I won't go through every point. Customer account increased by 169 1 year ago to 304. That's huge. U.S. revenue grew by 42%. U.S. commercial revenue grew by 120%. U.S. government revenue grew by 27%. 40% of the business is outside the US. That's a great sign. We want to see Palantir adding more customers, especially those enterprise customers, more businesses from around the world. And that actually leads into, they just announced a partnership with Azul Energy, one of the largest energy companies out of the country of Angola. Palantir will essentially be helping this company with their production efficiency. They want to try to increase from 200,000 barrels of oil per day up to 250,000. So that just gives you an example of what Palantir can do for companies. Another little highlight regarding a business I want to point out is Westtrack just extended their contract another 5 years. Westtrack is one of the largest dealers of Caterpillar equipment. Caterpillar, think of like bulldozers and large earth movers, you could say. They sell equipment all over the globe. So that's a great company for Palantir. It's not just US, it's global. We want to see more of those global footprints, those global companies, and helping those companies sell more products, become more efficient at, of course, marketing, sales, and operations. Okay, let's talk about 3 triggers that could cause this stock to take off. So I'm jumping into the earnings calendar. This is number 1. We can see these estimates. Check this out. You can see like 2 cents, 3 cents, 4 cents, 5 cents. Let's say the next earnings report is 5 cents or 6 cents on that estimate, but they come in at 7 or 8 cents. That would be enough to say to institutions, wow, we've got something here. Let's pile in more capital into this business. So that's 1. Look for 7 or 8 cents on the report. We'll see if they can hit that. Okay, number 2 relates to quarterly revenue. If you take a close look here, and we're inside the income statement revenue, this is on quarterly. We want to see that go from 530. You can see the numbers here. It's like 525, 525, 530. If we can see that quarterly revenue jump to like 550 million, that would also be another positive indicator. And the third trigger would relate to cash flow. We're jumping to the cash flow statement. Free cash flow, check this out. We were sitting at 182 million, 182. Then if we see that go from 86, this was the most recent, we go from 86 up to like 190, that would be the third indicator. And if you get those three things checked, that's going to provide a lot of confidence to institutions, and you could really start seeing that share price take off. But keep in mind, the key one is usually EPS. That's the key indicator that a lot of large institutions look for. It's just EPS is your net income divided by your outstanding shares. So essentially the profitability of the company. Okay, that's a summary of Palantir. If you like this video, hit that like button. If you want to see more videos like it, hit that subscribe. And if you want to follow Palantir or any other stocks and just, keep your eye on these stocks, I love this platform because it monitors these stocks for me. If something changes regarding that summary, if it changes from on sale, or if that score changes, or if that margin of safety changes, I automatically get notified so I can go do things I want to do and let the platform do the hard work for me. Of course, you can join Tykr for free. All right, we'll see you in the next video. Bye for now.